Which is the better savings instrument, gold or silver? Lately, I heard none other than the Honorable 2024 presidential candidate, Tim Marshner of Tim's Coin and Stamp Shop, say that he recommends keeping gold as a long-term savings instrument with funds that will never be needed, and to buy silver to be used for future purchases. Right? That to use silver on something that you want to maybe buy in a year or two. And unfortunately, and I hope this doesn't affect his presidential bid, but unfortunately, I disagree. There's three major problems with this outlook: premiums, volatility, and price action in US dollars or local currencies. And we're going to talk about those today. Premiums. Consider the same day, same price, round-trip purchase for an ounce of silver. That is, you on a specific day, you buy an ounce of silver, and of course you're paying a premium to spot, and then you sell it, let's say a minute later, even to the same dealer. You'll have to sell it back, right, at spot price or something close to it, right? Even looking at generic bars and rounds of silver, stackers can expect us to pay about a 12 to 15% premium over spot, and they can only sell it for about at spot. So at $22 an ounce for silver, this works out to about $264 to maybe $330 in spot. So if you go to buy an ounce of silver and then you sell it back immediately, you've already lost that amount. Again, you've already lost 12 to 15%. Gold is available usually at about a 1 to 4% premium over spot. So at $1,870 an ounce, which is about the closing price today, this works out to about $1,870 to $7,480 an ounce. So that if you buy an ounce of gold, you can buy an ounce of gold for, again, 1 to 4% over spot price, and then you can only redeem it at spot price, right? Mm-hmm. So premiums are a big factor to consider if you're looking to liquidate metals anytime in the near future.
I have a question. Mm-hmm. Does that apply to junk silver as well? The 12 to 15% spread on the buy versus the sell?
Yeah, absolutely. You know, with so-called junk silver or constitutional silver, and with a lot of American products like the American Silver Eagles, or with Canadian Maple Leafs even a little bit now these days, the premiums are actually higher than 12 to 15%.
Oh, but the junk silver would be 12 to 15%.
Yeah.
Okay.
Gold offers a far less bid-ask premium spread and provides short-term liquidity at 1 to 4%. That is to say, if you, for whatever reason, bought gold, and then let's say a week later or a month later or 6 months later, you had to sell it for whatever reason, then you only lose maybe 1 to 4%, assuming the price hasn't changed very much. And this is an exchange fee that's on par with a lot of other monetary transactions or currency transaction fees. For example, most credit card fees are about 2 or 3%. If you go to another country and you try to switch US dollars for euros or US dollars for Swiss francs or Aussie dollars or Canadian dollars, you'll lose about 1, 2, 3, 4% in the exchange. So the way I see it, changing US dollars for gold is pretty similar to changing US dollars for any other currency. It's like a currency money or a currency swap. So you're not losing a lot of the transaction. It's also the same amount you lose whenever you go out to a retail establishment and you're having to pay that embedded 1, 2, or 3% credit card processing transaction fee, which adds cost to things too. So if you pick up gold and you have to sell it, again, the price staying the same, the spot price staying the same, then your purchasing power is maintained, and also you have liquidity. With silver, you don't have that. With silver, you buy it, you immediately lose 12 to 15% of your purchasing power for if you have to reconvert it back to fiat dollars or fiat currencies. That is not as good of a short-term liquid or intermediate-term savings instrument. That is to say, if you ever have to sell off your gold or silver for fiat, I think it's unwise to have to do that with silver because you're immediately losing so much. Mm-hmm. Whereas it's much better to do that with gold because you lose a lot less, just based on the premiums.
So it sounds like premiums are in gold's favor.
Yeah, I think so. I like gold because it has short-term liquidity, and the transaction costs for holding on to it are minimal compared to silver.
So you mentioned premiums, and then you also mentioned volatility.
Volatility. Why don't you tell us about volatility?
Well, I think everyone here probably knows silver is a bit more volatile than gold.
Oh, I thought you were going to talk about female volatility.
All right, silver is more volatile. That could be a drawback to investing in gold, or it could be a advantage.
Well, what do you tell us? What you personally, what do you like about the advantages of volatility investing in gold or silver? And then what do you dislike about the disadvantages?
Well,
for
of course,
yourself?
I like the upside advantage of the beta for silver giving us a higher return if the price of gold goes up. Probably like most people, I like the high beta when it works in our favor. So when silver is going up at a faster clip than gold, I'm happy to hold silver. And I like the lower beta that gold has as it relates to the price of gold dropping because it doesn't fall quite as far as silver might fall.
Beta meaning that when you benchmark one asset to another, that a higher beta means it moves faster than that benchmark, up or down, and a lower beta meaning that it moves lower or at the same speed. If it's 1, beta equals 1 as the benchmark. So if gold is 1, then typically, like let's say if gold moves up or down 1%, silver will often move up or down 1.5%, 2%.
So I would say that's kind of a wash because the volatility could be positive or negative depending on the price movement of gold.
Yeah, absolutely. So when I think about saving away cash into gold or silver, I think that volatility of silver can be a big problem if you need to liquidate. And again, this is more maybe short-term, intermediate term, but it could also be long-term too. You know, especially if somebody has the unfortunate situation of having emergency costs that are very high, or else they're unemployed for a longer period of time than maybe they anticipated. Having to liquidate silver already, again, you're losing that premium. But then if the prices have moved down or against your favor, let's say you bought gold at 2,000 an ounce or something, and silver at maybe 25 an ounce, you know, and gold goes down 10%, right? Well, you lose 10%. During that same period of time, silver might go down 20 or 30%, right? So if there's any need or any possibility in the future that you'll have to redeem some of those precious metals for fiat currency, and it's in a situation prior to a major inflationary episode taking place, or prior to even a hyper or super inflationary episode taking place, you could be caught flat-footed and you'd have to sell off some of your precious metals to redeem them for fiat, to redeem them for currencies. And having to do that with a lower volatility or a lower beta precious metal like gold might be more favorable than doing it with silver.
It's a safer store of value.
In the short to intermediate term, yeah. I believe silver is also a very safe store of value, but the price fluctuates so much that if there's any possibility that you need to redeem it in the future, you just don't want to be caught on the wrong side of that trade. That before silver eventually goes up probably pretty high in terms of fiat, I think 30 or 50 in the next year or two is probably attainable. And don't hold me to that, but I think it is. But let's say before it does that, maybe it goes back down to 20 or even 17 again.
Yeah.
And you have to liquidate in the next 6 months or a year before it eventually jumps up to 30 or 28 or whatever, wherever it goes, you know, later in the next year or two. I just think that could be a huge disadvantage.
So the conservative investor would favor gold when it comes to volatility.
Right, yeah, especially if you're trying to make sure that store of value is retained. Yeah, absolutely. And if you just go through a little bit of the math, let's say you consider that there's a 5% drop in gold price, right? And you pay a 1 to 4% premium for it, and then you have to redeem it at that time. So you've bought it, you've already had to pay the premium, and then the price goes down 5%. At some point in the future, maybe it's 6 weeks, 6 months, maybe in a year or two, you have to redeem it for 5% under what you paid for it. Well, then you're looking at a cash value loss of 6 to 9%. Let's say in that same period you bought silver, and then you pay 12 to 15% for the premium, and instead of a 5% drop, because silver is higher beta, then you have 15% rather than 5%. And then you have a total cash value loss of 27 to 30%.
Yikes.
Which is a pretty big hit. I'd rather lose, in fiat terms, only 6 to 9% of something that I had to redeem for cash than 27 to 30%. So I think that having a pool of gold and US dollars to account for anything you might have to spend in the next year or 2 or 3 years as part of your reserves, I think makes a lot of sense for personal expenditures, for family expenditures. I think that makes a lot more sense than holding on to silver, which I think is kind of the opposite of what Tim was saying.
One thing that silver probably has as an advantage would be its divisibility.
Yeah, that's true. Yeah. Well, having a small fund of maybe small, like 1 ounce bars or rounds or constitutional silver for immediate barter purposes for maybe 2 months, maybe even up to 8 or 12 months, just basic necessities like food, things like that. That could make sense too. But don't forget, in an SHTF situation, there's going to be a lot of, as there is now, there'll be transaction of smaller units and larger units for each other. So, you'll be able to take a 1 ounce gold bar and you'll be able to switch it out for barter silver if you need it. That will be widely available still, or for 1 ounce rounds. Yeah. So that's true though. Having a small amount of divisible silver does make sense for those purposes. Mm-hmm. But overall, between the premiums and the volatility, forced liquidation of gold is an inconvenience, but forced liquidation of silver is a disaster, or at least it can be, just because of the magnitude of what you lose between premium and potential volatility.
Yeah.
So the last factor to consider is currency price action. And what do I mean by that? Well, if you look at the historical charts of gold and silver, you can see that gold will have run-ups in price, and they look kind of like hills. They go up kind of like this, and they kind of stay up like that, and they eventually go down, or maybe mesas, plateaus. Silver looks like jagged, tough to climb, impossible peaks, right? So if you're holding on to gold as a way of storing value and saving it for tough times, and you want to redeem it over a period of time, over a longer period of time, that is measured in multiple years, maybe even a decade, rather than just a couple of months or even a year or two, then you're better off holding gold, because you can sell as you need to or redeem gold for whatever you're trying to buy: butter, cattle, land, who knows what it might be, vegetables, tools, firearms, who knows. You can redeem it for a longer period of time, because just the price action of gold historically tends to be more slow and gradual. It doesn't go up as much, but as it goes up, it retains its value, at least in fiat currency terms, right? And I believe that also extends to other things too, not just fiat currency, but other commodities or things you might want to buy. Whereas when silver starts to really run up, like, it'll have these little periods of time where it kind of ratchets up, but when it really, really runs up at the end, in either a currency crisis, monetary crisis, or also really difficult economic times, it'll ratchet up really, really high, right? And then it'll fall almost as fast, right? The 1970s are a perfect example. Silver, went from $1.50 to about $2, and then hung out at about $6 for a while, and then it went basically from $6 or so all the way up to about 50. And about a year or two later, it was all the way back down, I think, to 12 or something like that. It went up really fast and then came down really fast. And I think for those people who are saving in silver, they just had this very narrow window of time in which to spend it or redeem it for other things. If they're trying to redeem it for parts, ownership in an oil field or barrels of oil or butter, again, whatever they're trying to redeem it in, they have a very narrow window of time. And that forces, I think, a lot of people to, if they're going to get the maximum value they can out of that, it forces them to think more like a trader than like an investor.
I was just thinking that seems like that'd be a better space for traders, because that's a tough place to be in. Like, a small, narrow opportunity to capitalize on an investment can hurt. Even if you do well, you sell too soon or too late and you're still kicking yourself.
Yeah, it's hard to hit that peak exactly.
Yeah.
And then with gold during that same period, it did go up I think from, it started, I think, at about 35, went up pretty fast to 100, then hung around, I think, 200 for a while. And then eventually went up to about 650. It peaked out a little bit at 850 or so and came back down to 650. And the period that it was about $600 or more, I think stretched out to about 3 or 4 years, from I think about 1978 to 1982. And then slowly, it took about 20 years for gold to go from 650 to 250 in US dollars. That took a long time. So there would have been a lot of time to just slowly redeem your gold for whatever it is you're trying to get. Maybe at that time you want to buy stocks or bonds or, again, parcels of land, butter, whatever you're trying to buy with it. You'll just have more time. So that's it's not just the volatility, but it's just the tendency of the price action of gold versus silver, I think, makes it that if you're trying to redeem gold for things and maintain the value of that, and probably this is more intermediate to longer term, not long, ultra long term. I'm not talking decades in the future. I'm just talking within your lifetime, or our lifetime, probably in the next 3, 5, 10 years. It could make sense to hold on to gold to make sure that you can get the most of that, unless you're interested in trying to time that top. But that's probably easier said than done. Trying to time a top in silver if it goes parabolic, rather than gold if it kind of comes up. So, obviously, probably there's a mix for everybody that's just right for them. But having a year or two, if possible, of savings, first in gold, or maybe primarily in gold and barter silver, and then later on adding silver to that, to me makes more sense.
It's funny you say all this, because I don't know for sure, but I feel like you stack silver more than you stack gold.
That's true, but that's because I've got, I think, enough gold to live on for a good while, and gold equities too, which have some of the problems of silver.
True.
But I have enough gold to live off, and getting more gold is kind of my goal for the year.
Right, because I feel like you're more of a silver stacker than a gold stacker.
Yeah, but I'm just trying to accumulate as much silver as I can before it hits 30, because I think once spot gets to 30 or above, I don't think it's going to look back again. It came up once, it came back, came up the second time, it's come back, and I think third time, maybe fourth time will be the charm. So I'm trying to get as much silver before I think it goes to the 30-50 stage, because I think once it gets there, I don't think it's going to come back. Whereas in that period of time, gold could go, maybe silver goes up to the 30-50 range, gold's hanging around probably in the 2,000 to 2,500 range, and then I can go get a bunch of that with whatever cash I have laying around. It's kind of my idea, but I'm trying to accumulate silver. But you're right. If I was following my own advice, I'd be getting a lot more gold right now.
Yeah.
Just to make sure I had plenty of it sitting around, so that if I have to redeem it in the next year, 2, 3 years, if I get laid off, if anything happens, then I can easily do that. You're right, because I would hurt right now if I had to redeem my silver.
Yeah.
It would be unpleasant, because my cost base isn't crazy high, but it's a little bit higher than current spot price. So. A little bit, probably 10 or 15% higher than current spot price.
Don't want to sell right now.
I'd be exactly in the position that I'm warning people against. Yeah. I'd have to redeem. If I had to redeem silver, I'd take it at a loss, and that's too bad, Yeah. I will say that the only exception to this will be if we do return to absolute sound money standard. For example, then if gold and silver are used by one or more governments as actual money itself again. The U.S. is starting to mint for common use exclusively, no notes anymore. They're just minting coins, right? Only coins, and they're issuing, and both gold and silver. Silver could then hold its value just like gold would, right? Because if they're used as money again, they'll be fixed to each other. They'll be pegged. What do I mean by that? Throughout U.S. history and throughout most government history, gold and silver has been pegged at about a 1 to 12 to 1 to 20 ratio, right? More like 1 to 15, 1 to 20. I think for the most part in U.S. history, it was 1 to 16. So it was just declared by government declaration that you could, if you have 1 ounce of gold, you can redeem it for 16 ounces of silver, right? Mm-hmm. So if gold is used again as money by governments, probably because they have to, by popular political demand, by revolution, who knows what would happen, by public servants doing their jobs correctly. I don't know.
Not going to happen.
Seems impossible.
Just kidding.
But if it ever did, then silver and gold would again be money. Or even if, absent fiat declaration, if the mass of people chose exclusively to use gold and silver. They eschewed whatever else was going on, and probably had to refuse to pay their taxes in anything other than gold and silver. So I guess it would have to be some kind of quasi-tax revolt. But if either by popular will, collectively, or by government declaration, silver and gold were money again, then the silver would hold its value. But I don't know if that'll happen again. What do you think? Could it happen?
Maybe. I don't know.
Yeah. What do you guys think? Let us know. But in conclusion, compared to gold, in the absence of it becoming money again directly, compared to gold, I think silver has higher round-trip liquidation costs, higher likelihood of short-term repricing to the upside or downside, and you don't want to be caught on the downside. And there's an opportunity for higher price appreciation, but there's a shorter time period where appreciated prices are stabilized. And so I think it's hard. I think it's hard to catch that, I think, for a lot of people psychologically. So for savings, any amount that I might have to liquidate for future personal costs, I'm going to hold that in gold, not in silver. And I'll have a little barter silver, 1 ounce silver, constitutional silver for SHTF situation. And then the bulk of whatever silver I have otherwise is going to be for trying to sell into that peak, I think, more than anything else.
That seems reasonable. I wonder what our viewers think, because this is kind of at odds with hopeful President Tim.
Well, I say, still don't forget to vote for Tim, okay? I don't know what party he's running for yet or what primary, but make sure you vote for him if you can. And I'll leave you with this final thought. The silver lining here is that the only way to screw up the golden opportunity of precious metal appreciation is never to sell or redeem in exchange for assets at market tops, whether it's gold that you do that with or silver. I see too many people, probably over long periods of time, holding gold and silver throughout these times, even when they can get a lot of really good deals.
Did you come up with that yourself? That's pretty good.
Thanks. But anyway, these are my precious thoughts.